Welcome, welcome. Godric here, your stock market mentor, coming at you Monday night, February 3rd, 2025. How are you? A little late tonight, sorry. Better late than never. Try to come at least Monday nights and then also a random night during the week to check on you guys and see what's cooking in the stock market. Talk about some stocks, talk about some positions. Welcome. Unknown, welcome. Rad, welcome. Norcat Joe, welcome. Happa, welcome. Guys, get these likes up to at least 1,000. Want to show some report, throw me a couple cranes, a couple coins. I won't say no. Appreciate you. I have a few things I want to talk about tonight. Just we'll do a short and sweet session. A couple of things are on my mind. One is different philosophies in the stock market, really. Probably the main strategy or the main philosophy of the stock market, which has been successful for, let's say, more people or most people, is to just hold long term. Just hold long term. A lot of these millionaires are not intelligent stock market traders, or they don't really know how to do the stock market per se. They just buy shares and hold. Some people got a hold of Microsoft, Apple, Netflix, different companies, and held them long term and made a lot of money because the stock went up. The stock went to the moon, right? Amazon, Google, over the years. And also there's dividends, Coca-Cola, McDonald's. And they made good money over the years with, either share growth stocks or dividends. No trading, no savvy investment. Just buy a good company and hold it. I think that's probably the most common way to make money. You're buying like a credible company. You're not buying a penny stock, first of all. You're not buying a stock that's, in their arrears. You're buying like real companies that have like real profits, that have like tried and true profits and staying power and revenue and a good product. Let's say, something like Microsoft. Now, we don't know what the next Microsoft is, but if you look back 10, 20, 30 years, Microsoft, delivered products, and they were always profitable. So they have the requirements of a good company. So we're looking for those new companies that are smaller, that are like Microsoft, that are growing, that have those same criteria. And then that could be like the next, Microsoft, the next Google, the next Amazon. And again, you're just holding stock and you're just going long term, 5 years, 10 years, 20 years. Now, I don't see really any respect in that. It's just that you're taking advantage of the long term trend. If a company's successful and they make earnings and they have good balance sheets and they have a product or a service continually, consistently, investors are going to flock to them and the shares are going to go up. And if that happens, all these ingredients are happening, then you're going to get a long-term share growth. Look at Microsoft. Like, let me just pull up Microsoft. Just MSFT. just in the last 5 years, right? This is show you that it's still growing. It was 188 5 years ago, let's say pre-COVID, or during the COVID actually, 185. And now Microsoft is 412. So it more than doubled. So these companies that are so great are still going up. Microsoft, here, let's look at Amazon. So Microsoft more than doubled, MSFT, Amazon, AMZN. Still, it's good. Current share price 238. During the COVID, 106. So more than doubled again. Same idea, Amazon. Today, let's look at Apple, AAPL. Current price 228. COVID $70. So Apple tripled in price. Okay, so Apple's still growing. Another one that comes to mind, Tesla, TSLA. It was down today because, I don't know, tariffs. 389 minus 20 today. No, it was 383 minus 20. So that means it was 403. So COVID price on Tesla, $56. Current price, let's say 400. It went up 4 times. 4 times? 8 times. Tesla went up 8 times in 5 years, from 56 to 389. Here, let me just get that right. 389, even counting today's decline. 6.9 times, 7 times in 5 years. So these investors who have these long-term shares, these good companies, they're making money hand over fist. But the problem is, and when I say no respect, is that they don't trade, they don't sell their shares. They can't really benefit from their shares. Their shares just go up in value. Now, when they get retirement age, they have a couple options. They can start selling shares to get their money out. Or what happens, honestly, what happens a lot is they pass away and their kids fight over the money. Because their kids inherit their accounts. And since they never really traded or sold their shares, they just, the kids just fight over the money, honestly. And if they are alive and old enough to reap the rewards of their investments, they could start selling the shares, but that leaves you eventually with no shares. So it's not really a plan, I don't think, but it happens a lot, honestly. Millions of dollars in these long-term stocks over decades, and just not even really spending any of the money, just letting it grow. And that's probably the most common example I see in real life. What happens with stocks? People make money over time. They get a hold of some good stocks, but they don't really sell. They don't really trade. So it's just something to think about. And then on the other side, there's the dividends. Dividends are great because people are getting the dividends, and they're getting a yield. Let's say 2%, 3%, 4%, which on $1 million is $20,000, $30,000, or $40,000 a year. And let's say we're in Pepsi. Okay, let me give you an example. Pepsi PEP stock $149 today. Oh, by the way, Pepsi's been going down, so it's going to a better, more valuable price. $196 was the high in July 2023, and now it's $150. But it was 140. It was 149. It was 149 in the COVID. Actually, it went down to 100 in the COVID, but it was 149 5 years ago, 145. So now it's back to the same price. Pepsi hasn't gone up that much. Doesn't have to, because it's a dividend stock. The yield is what? 3.6% right now. So $1 million in Pepsi gives you $36,000. Okay, dividend. Divide by 12. If you go monthly, $3,000 a month. And that's, we compare that like with Microsoft, Amazon, Google. It's enough to supplement your Social Security, and it's nice income. You can spend that money. You can pay bills with that money. You can't pay bills with Microsoft, Google, or Amazon shares. unless you sell them. Then if you sell them, you're a stock market trader. So what is it? You know. So you got long-term share growth and you got dividends. Those are two ways that people make money. I think dividends are a little better because you can pay bills with that money. It's real money. Where the share growth, even though it's more money on the whole, you can't really spend it. It's not real. Uh, it's not liquid. Questions. How you guys doing tonight? Appreciate you. Give me some likes. Hit these likes up, guys. Appreciate the likes. Get these likes up to 1,000. I'll take some questions. I come on every Monday night. When donate a sub, it's only $5 a month. I answer subs questions. You can DM me just one question at a time. And also subs can come up in the live. They can talk. They can ask questions. Questions for the mentor tonight. Thank you. Thank you for the coins. Appreciate you. I had a couple stocks I want to talk about. One is, first of all, let me see if I can get. Here's a couple stocks to look at. First of all, the Dow Jones was down 100 points, 122 points today. Overnight, the tariff fears crept in, and we were down like $500, 500 points at the open for the Dow Jones, and also pre-market, and all the stocks were down. Like they all dipped, you know. But as I suspected, once the market opened, that dip, people started buying that dip. Why? Because the tariffs tend to strengthen the dollar. That's the thing you guys got to realize. So the stock market really isn't bothered by tariffs because tariffs are strengthen the dollar because the tariffs are money going to go to the economy, going to go to the government. So it's more money for the government. And it says the dollar is getting stronger, at least compared to the yen, compared to the other currencies. So that part's good. And as far as a tariff war, right? If you guys talking about a tariff war, the U.S. is going to win any tariff war, honestly, because all the world follows the U.S. because we're the boss in finance. And the only people that can really bother us is China. And China's not going to want to have a tariff war with us. So we're going to win that exchange. You know, Canada, Mexico, they all have to kind of bend to whatever Trump wants to do because they're going to get hurt more by a tariff war. So it's just going to strengthen the U.S. economy, make the dollar go up, make the stock market go up. And by the end of the day, the market came back. And there's only down 100, which is no big deal. And a lot of stocks went up. Well, some stocks went up. There's McDonald's. Notice that dividend stocks went up today. McDonald's. I'm going to talk about IONQ today, which is quantum computers. IONQ, write that down. I'm going to talk about Palantir. And also Roblox. So let's do that. Let's see. Palantir, first Palantir. How you guys doing? Appreciate you. Throw me some likes, guys. Throw me a couple coins. I won't say no. Subs only $5. And I can answer subs questions about stocks, about trading. I can comment on the trade. All right, so we had earnings with Palantir today. As you can see, after hours, it's up $19, pretty substantial. If you look at the 6-month chart on Palantir, it went from $24 to $83. So like more than triple in 6 months. So it's on a nice, vertical going up, nice incline. And they beat earnings. And they had to get earnings in the market, and it went up another 20 points in after hours, 18 points now. And Palantir is one of those stocks that there's room to grow. PLTR, PLTR. I'm getting. You can see some stats at the bottom. PE is 418. At least PE. At least they show a profit. You know, obviously 418 is a really high PE, but they're showing a profit, and the shares are going up, and it has a 6-month chart going up, and they're making their earnings. So, you know, I was telling people that this stock will go to $100, you know, back when it was 60, but now it hit $100. So now we're maybe like 150. The next move is probably towards 150, and they're kind of big already. They're 100 and let me look at the market cap. 190 billion market cap. 187 billion market cap. So let's just say, you know, there's room for it to double. You know, let me see if I can read pounds here for you. See if my computer's working.
Q4 non D to provide tax. None. Not. Morningstar equity analyst earnings.
I get to go up here.
Palantir Technologies Incorporated builds and deploys software platforms for the intelligence community to assist in counterterrorism investigations and operations in the United States, the United Kingdom, and internationally.
Can I say that?
The company provides Palantir Gotham,
Thank you,
a software platform which enables users to identify patterns hidden deep within data sets, ranging from signals intelligence sources to reports from confidential informants, as well as facilitates the handoff between analysts and operational users, helping operators plan and execute real-world responses to threats that have been identified within the platform. It also offers Palantir Foundry, a platform that transforms the ways organizations operate by creating a central operating system for their data, and allows individual users to integrate and analyze the data they need in one place. In addition, it provides Palantir Apollo, a software that delivers software and updates across the business, as well as enables customers to deploy their software virtually in any environment, and Palantir Artificial Intelligence Platform, IP, that provides unified access to open source, self-hosted, and commercial large language models, LLM, that can transform structured and unstructured data into LLM understandable objects and can turn organizations' actions and processes into tools for humans and LLM-driven agents. The company was incorporated in 2003 and is headquartered in Denver, Colorado.
Very interesting company. It combines like military with tech, with software, with AI, and with agents. So that's very interesting. You know, things are heating up in the Middle East, or they have been. You know, Russia, Ukraine. So I think they're going to be a good bet for the next 4 years. Pounds here. I'm getting 102 price after hours. Probably it'll maintain this price tomorrow. It may dip, you know, but eventually then go back up. I wanted to show you the option chain for Palantir. See if I can. Well, first of all, let me see if I can show you the. This is the 6-month chart, okay? Here's the 5-year chart on Palantir. You can kind of see like the little dip it has, and then it goes up vertical. Kind of maintains price, and it goes down, then it goes up. That's kind of like a couple to handle pattern right there. It shows, you know, it's not a new company. They've been out for a little bit. They're showing a profit. They have great volume. Pounds here, I have average volume. 72 million on a 90-day. The last four earnings. Listen to this. Last four earnings on Palantir. Beat, 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 beat. They have it going on. They know what they're doing. And here it's like beat by 1 penny, beat by 1 penny. So it's like they know how to get their earnings. So if I'm gonna just like make a recommendation, look at Palantir in 3 months. You'll see them probably beat earnings again, and probably they're gonna go towards probably towards 150. Maybe not within 3 months, but maybe within, let's say, this year. And you're probably good to you can hold the shares, you can sell cover calls, you can even buy long calls. Matter of fact, let's jump to that. Here's a 2 year, here's a 2.5 year option chain on Palantir. I wanted to show you. Um, Here is what it looks like when you want to buy an option for 2 years out, 2.5 years out, 900 days. Like the stock is, according to the close, is $83. Okay, but before it went up after hours because of the earnings. But according to the $83 price, the call option for let's say at the money 85 was $33. Okay, that's to say that you can buy a call option for 33 points, which is $3,300. Which is, you have the shares at 85 price for 2.5 years out. This is the leap for Palantir. I'm looking at the left side calls, right side puts. Looking at the calls today. So that means that you can spend $3,300 buy one call option for the 85 strike, which is at the money. And just today, that call option would be going up like 20 points. From 33 to 53 probably, because of the after hours move. So like you can like double your money on the call option, when you have a big move in the stock. Now the shares, if you bought the shares, it's safer because the shares, if they come down, they'll come down in value. You'll still have the share price. May come down 10%, 20%, But when the option comes down, it can really, go to zero, technically, or go near zero. And if you buy this call option, 85 strike for 2.5 years out, you only have value if the stock is above 85 come expiration. Now, probably the stock could be, 150 or 300, And let's say it goes to 300. Let's just say if it takes 100 price here tomorrow, and then triples in 2.5 years, right? So what you have is a call option that you bought $33, goes to $300 share price. That would make your 85 call. Let's see, 300 minus 85. Minus 85. That'll make it your $33 call option, 215 points, $21,000. So you can go from a $3,000 to $21,000, which is 7-fold return in 2.5 years on a stock like this, if the stock were to triple. And that's leverage. You get 7 times your money on a big move like that. Now the shares will triple, but the call option can times 7 times, for example, 7-fold, and that's leverage. The risk is if that stock doesn't go up in 3 years, in 2.5 years, that call option can be zero. And if you had the shares, at least you have shares. It'll be 85. You wouldn't lose any money if the share price was the same. Share price can go down a little bit, 5 points, 10 points, 20 points. You still have, 8,000 investment at 100 shares at 80 price. Let's say it goes down to 70. You still have 7,000 investment. Goes down to 60. You still have 6,000 investment. But the call option is tricky because if it doesn't get in the money by expiration, bam, big fat goose egg, you got nothing. And if I had $1 for every person that told me how they lost money in call options, man, you can fill in the blank on that. A lot of people lose a lot of money in call options. Because call options, a lot of them expire worthless. Let's be honest. So what you want to do, you want to get a really good company like Palantir or other companies. We're looking for the next Microsoft. That's what we're looking for. You know, not sure what that's going to be until it happens. But a company like Palantir, has room to grow. Could probably triple, let's say, in the next few years. Probably. It has the ingredients, I think. Questions? Appreciate you guys for joining. I come every Monday night to talk about stocks, talk about some positions. So the third strategy I wanted to talk about. First, we talked about long-term share growth, which is just holding shares of good companies, not trading, not selling. Next is dividends. Getting dividends. 3% yield, 4% yield, which is good. No trading really. And then this fourth way I'm talking about does involve trading. It's like long-term call options. In this case, we're talking about buying. You know, stock like Palantir, you can spend $3,000, $3,300, get a 2-year call option, 2.5-year call option. Can go up to like 7 times. If the stock really moves. That's a good example. That's a good example of, I would say, a fair trade, not a risky trade, but with some risk. Definitely some risk. More risk than buying the shares. What I do, I sell these call options 2 years out, 3 years out, because I get that money back on my shares. Because who wouldn't want to buy Palantir here at 83, get $3,300 back, spend $8,000, get $3,000 back in your pocket. That's just how I like to do it. But buying the call option, more risky, can really go up like 7 times. The stock, let's say stock goes at 300, and I have another one I'm going to get to. Any questions on that? Appreciate you guys. Throw me some more likes. Get these likes to 1,000. Throw me some coins. I won't say no. All right. Next one I think we're going to do is we can do IONQ. Quantum computers. I'll do Roblox also. This pounds here. IONQ. Here is the 6-month chart. Has a nice little uptrend. It was $6 6 months ago, so coming off of a dip, and it was higher. This is a 5-year chart for IONQ, so it has a 5-year. It was $11. That's like some nice little. I like to see these dips and valleys because it tells me that investors are buying the dips, and that's important. This one has a lot of the criteria I like. It has volume. I'm going to pull it up. Quantum computers, IONQ. We're looking for the next Microsoft, guys. We'll find it. Hang in there. We'll find it. All right. IONQ, 90-day average volume, 27 million. That's just nice. Not as big as Palantir, but if you look at the market cap, 9 billion market cap. So Palantir is 190 billion. So Palantir is like 19 times what IONQ is. This is a small company. There's no PE yet. There's no profits yet. The last 4 earnings are miss, beat, beat, miss. So 2 miss, 2 beat. So definitely not equal to what Palantir is doing. So be leery. This one has. I want write this down. IONQ is going to have earnings around February 26th. They haven't actually announced the actual date, but they're supposed to have a nice increase in revenue, according to them. And if they beat the earnings, then they'll probably go up. This one will probably go to $75. The high was 54 per share. And that happened recently. It dipped down. Now it's climbing back up. and it'll probably go. My target price is 75 for IONQ, and for Palantir, I'm just gonna say 150 is the next one, because they're that in demand. And I think this is a pure play quantum computer company, so this is probably the boss, I think, or one of the bosses of the quantum computer companies. And being pure play, I mean that's all they do. It's also a takeover target. Palantir, for example, I don't think is a takeover target because it's already 190 billion. So I don't know who's going to buy it at that price, you know. But quantum computers definitely takeover target. $41 a share. Today it was up 198 or $2. This one I think is probably with risk. When I say with risk, because there's a handful of quantum computer companies. It's not just this one, but this one I think is probably one of the better ones, and the share price is higher. It's farther away from that penny stock range, for example. And write it down. February 26th, on or about, we'll probably have some earnings. Then we'll see if it can pop. A pop on this one's probably $10, $5, $10. And then, I like to do cover calls, but I'm going to show you the long-term call on IONQ. Here we go. Okay. This one is a little bit more impressive, actually, than Palantir. Because why? Because if you look at the 45 call for 2 years out, 2027, it's $20, 20 by $22, which is to say that you're getting back 50% return on this call if you sell it. These calls are very expensive, which makes me want to sell them, like these 2-year cover calls, But even if you bought the call for $2,000, 20 points, 2,200 for the 45 strike, I'm showing you the left side, you get 2 years of the stock growth, which is to say that if this stock, let's say $41, let's say it goes to 75, then 100, and then let's say 150. So let's just say it quadruples. Let's just say it goes to 160, quadruples in 2.5 years, which probably it could easily do. I'm giving you these stocks that can move. Let's do the math, okay? 160 price minus your 45 strike, 115. So this $22 call option could be 115 in 2.5 years. Divided by 22, 5.2 times return. So leverage. You're investing 2,200, you can get back 5 times that. It'll be $10,000. This $150, $11,000. This call option. If IONQ went to 160, which we know these stocks have moved that much and more. Questions? So we discussed a couple things tonight. Different strategies. One, just holding long-term great companies. Not getting income, not really benefiting, except that your kids will fight over the money when you pass. Number 2, dividends. Dividends are great, I think, because you get to spend the money. Even though it's only 3% yield, 4% yield, you get to spend the money and you don't have to, worry about selling. Just hold the shares. And then 3, these long-term call options. They can work out if your stock is good, your company's going up, your stock's going up, the call options will go up. And you're getting, 5 times leverage on IONQ, 7 times leverage on Palantir with certain different examples I'm showing you. Appreciate you guys. I'm going to look at some questions here. You guys have any questions for me? I'm going to talk about Roblox next. This one, Roblox, I think, is also pretty decent. Different reasons. So, if you want to take that risk, you can buy these long-term call options and probably have a nice leverage. It's more risky than the shares, but the return is higher than the shares. When I do call options or options, I like to say options are a way to control the stock with less money but more risk reward. That's really what options are, I think. Okay, now without further ado, Roblox. Roblox. Okay, this one kind of surprised me. Roblox is a platform. Let me see if I can pull it up. The kids play that. RBLX. They got Roblox Bucks. $70, down 39 cents today. Not afraid of the tariffs, right? The 5-year chart, it goes back to $36. It was $36 6 months ago. But 5 years ago, I have it starting around $70. Actually, May 2021, so 4 years ago. Went to 70, it went up to 115. It went down, now it's going back up. Let me show you the longer term chart. Here we go. Here's a 5-year. Here's what it looks like in 5 years. It started, with hype, went up, and then it came all the way down, and then there's like a bull pattern. So what this shows me is that we can reach we can definitely reach the previous price of 140, which happened in 2021, September 2021, 2022. So this one is definitely also going up. It doesn't have a PE yet, so risk. But look at these earnings, Roblox. The last 4 earnings are beat, and beat by 3 cents, beat by 1 cent, beat by 7 cents, beat by 2 cents. So again, these guys also, like Palantir, know what they're doing. They know how to make their earnings. And guess what? Write it down. Earnings report February 6th. That's Thursday. Thursday after hours. The earnings for Roblox, and probably it's going to be a beat. And probably stock will jump a little bit. Maybe shares like this, $70 probably go $5, $10 at the most. If the market doesn't like the earnings, probably dip $5 or $10. But still, I think you have a stock that's going up and it has a lot of room to grow. If I look at the 90-day volume, which I like to look at, 8 million volume. Okay. And we know IONQ is 9 billion value, and we know Palantir is 190 billion value, and Roblox is 46 billion value market cap. So it's right in the middle there. By the way, I like to have a 50 billion market cap on my stocks as a minimum. And I think that's kind of like a threshold of 50 billion that kind of gets you from out of the small time into the big time, I think. Let me see if I can read Roblox for you. My computer will cooperate.
Roblox, correct sequencing of this information nor any results from the use of the information. Schwab does not guarantee the past
Let's see.
Company profile.
Here we go.
Roblox Corporation develops and operates an online entertainment platform in the United States and internationally. It offers Roblox Studio, a free tool set that allows developers and creators to build, publish, and operate 3D experiences, and other content, Roblox Client, an application that allows users to explore 3D experience, and Roblox Cloud, which provides services and infrastructure that power the platform. Roblox Corporation was incorporated in 2004 and is headquartered in San Mateo, California. Read less. Stay connected trademark.
Okay, that's what that does. And they have these Roblox bucks, so you can with real money you can buy Roblox bucks. You can buy stupid stuff in the game like digital things, which I think is kind of cool. Questions on that? Are you saying invest into Roblox? Some black guy. Roblox, I think, is a stock that's going up. I'm gonna show you the 2 year call options right now. This is one that, yeah, I think it can hit 140, which is the previous high, and I probably go, let's just say 140 for now. Okay, so double in share price, 140. Let's say this year, and probably let's look at the 2 year. Did I show you? Did you guys look at the 6 month chart? Let's see. Did I show you? Here's Palantir. Here's the 5 year Roblox. Here's a 6 month chart on Roblox. See how it's going up like that? I can't tell you to invest in it, but you can see this trend. It's doubled in the last 6 months. The previous high is 141. It's 72, 71 now. So just do the math. You guys got to just, use your better judgment. That's what I'm saying. If this is, as hot as it really is, it'll continue going up. I'm giving you different reasons why it's good. Giving you information about the company, and I'm going to show you the call options now. You just decide what you want to do. Okay, here's the 2 year call options for Roblox. Similar to the Palantir and IONQ. The 75 strike, which is just out of the money, $20. Again, $2,000 investment. If it does go to 140, which is only double the share price, which it could probably easily do this year, 140. This $20 call will be what? 140 minus 75. $65. So triple your investment. That's the leverage. Triple your investment within 1 or 2 years in Roblox. If it does hit that old high, which I think it probably will, and break it, it can probably go higher. But I don't want to give you guys, illusions of grandeur. Everything in business is risk. These stocks, who knows where they're going to go? I'm just showing you trends. I'm showing you what could happen. Can't say it's going to happen. I'm telling you, there's earnings. Palantir killed the earnings today. Stock went up. Roblox has earnings on Thursday. IONQ has earnings February 26th. Just write it down in your journal. We'll just see what happens. If they continue to do what they're doing, Roblox has 4 beats on the earnings. Beat. I don't see. I mean, tell me what you think. These call options are very expensive. Ultimately, I think it's better to sell the calls than to buy the calls. But if you want to get behind these stocks, buy these calls. You can get 3 times, 5 times, 7 times your money back within the time frame, within the time frame of the life of the option before expiration. I think. How close to earnings should I invest in a stock if you think it's a good stock? Burnosaurus, welcome, appreciate you. Yeah, thank you for the likes. Thank you for getting those likes up. Appreciate you. How close to earnings should I invest in a stock if I think it's going to be a good stock? Ideally, about a month before, and I'll tell you why. Because as the stock creeps up towards the earnings, the price tends to go up. Like Palantir, it's already going up this week. It already went from 77 to 84. Let me pull a Palantir. PLTR. If I look at the 1 month chart, it was like 64. It dipped down to 64. Then it went to 80. Then it dipped down to 74. And then this week, it just went from 75 to 80. That's why. And then it jumped up 20 points in after hours. So you're going to be paying more if you wait till the last day. You can buy do the trade or buy the option or buy the shares the day before the earnings. But you're going to be paying more for it. So I like to buy a month before. And if I'm going to buy a call option, I'd like to go out at least another month past So you get more time. Don't like buy call option for next Friday. Always give yourself like at least 1 or 2 or 3 months on the call option. If you buy the shares, it's probably better because less risk. Try to go a month before earnings. So if earnings every 3 months you have earnings, you'll have, let's say on month 1 you have earnings. So on month 2, 3, on month 3 is when you want to buy for the month 4 earnings. And then 5, 6, on month 6 is when you want to buy for the month 7 earnings. 1 month before, I think it's the best time. Because it starts getting expensive. Notice the stock price heats up, the week of the earnings, it heats up. Penalty heat up, And look at Roblox. So I bet it's already heating up because Thursday is the earnings. Let's see. Roblox. Yeah, so if I go a 5-day, it went from 67 to 71. It went up 4 points this week. And that's probably earnings anticipation. And if they make earnings, let's say Thursday, I'd probably go up $4 at least. So you get a little bit of share price or share growth, or you can maybe do a call option. I always say risk capital only. These things aren't for sure. They could have a miss. Stock comes down, and then what? If you like the stock, use it as a buying opportunity. What can I say? When you get behind the stock, and if you see the volume up, if you see the market cap going up, the stock is growing. Roblox has, on the Schwab, it has Morningstar 2 stars out of 5. Schwab equity ratings gives it an F out of F through A. But CFRA gives it 4 stars out of 5. Argus has no rating. Market Edge gives it a long buy. LSEG gives it a buy rating. Vickers gives it a 6 out of 7. So, different people are going to say different things. As a MMO, massive multiplayer online gamer, I would say it's going to go higher. Questions? Guys, we're about to wrap up. We talked about 3 different ways people make money in stocks. Long-term share growth, no selling, no trading. Dividends. Dividends are better in the sense you can spend the income. And then long-term call options, 2-year call options, times 3, times 5, times 7 on your money. Get some leverage. That's kind of what I want to talk about tonight. I'm going to answer a couple of questions. You guys can always DM me, just one question at a time. Don't be a sub. Want to support the page, and I can answer your questions if you sub, and I can bring you up here if you want to talk on my live. Come every Monday nights and a random night during the week in addition. Thank you, guys. God look out.